All right, Bob Pisani's got more on what's moving this morning as well. Let's join him. Bob.
And generally on the downside, and again, trade wars, economic uncertainty weighing on us, as well as, of course, that inverted yield curve that we're seeing. Take a look at the global markets. We're slowly getting out of August, so it's good to remind everybody. Generally down, small move up in the Shanghai. Essentially, everybody's down 3 to 4%. It's remarkable in August how consistently down the global markets are. We are down 3 or 4%. Shanghai, Japan, Germany, Spain, it doesn't matter. Everything's down 3 to 4%, essentially. Sectors today, well, of course, we talked about the defensive dominance this month with utilities and REITs up, consumer staples flat, essentially flat, and all of the cyclicals to the downside. So again, today, defensive, utilities and REITs up. Energy rather oddly up today, but oil is up. Oil is held steady in the mid-50s, yet oil stocks continue to drop in the last couple of weeks. That's not a good sign, particularly. Banks are flattish. Semis a good global proxy for growth on the downside. Cyclicals in August, we've emphasized the fact that the banks and the industrials and energy generally have all down. There's your big underperformers. And, of course, REITs, consumer staples, utilities, generally to the upside overall. Sarah was talking about Tiffany. Just important to point out how important the United States, the Americas are. It's about 40% of their sales. So their comp store numbers were down 4%. That was well below the estimates of down 2%. Japan's maybe 15% of their global revenues, down 3% there. Estimate was going to be the upside. Europe down 2%. That's another maybe 10, 12% of their revenues. So you see generally disappointing across the board, but America's is really the important one. And if you look at Tiffany's, here's another sort of proxy for the trade wars. Tiffany's had a big move to the upside, March and April, on hopes that this whole thing was kind of going to resolve itself somehow. And the minute we saw increased trade war headlines, Tiffany fell apart. It's a good proxy here for the trade wars and what's going on globally. And you see Tiffany's essentially flat, maybe up about 2% for the year right now. In terms of trade wars and political uncertainty going into September, there is a bull market argument that can be made. J.P. Morgan tried this yesterday. Basically, the bull market playbook is based on more stable economic data, not just in the United States, and we've had it recently, but over in Europe in particular, and China. That's a big call right now. It's more central bank easing, of course. And the most important thing is, I think, flattish earnings for Q3. And so far, that is what we are seeing. We are seeing some of the industrials and the materials move down a bit. That's not a big surprise. But there has not been a wholesale rush by corporate America to dramatically lower the numbers. And that's not surprising. You wouldn't have that unless there was expectations in Q20 that you might be going into some kind of recession. So flattish is the word we have been using for months now. That so far is still maintaining for Q3. And this is going to be the key to how September acts overall. Right now, we're sitting right near the lows for the day, down about 100 points in the Dow.